So what if I told you that right now in Tampa Bay, two homes on the same street can have completely different outcomes? One sells in weeks and the other sits for months. And the difference has nothing to do with the house itself. Because if you're just watching headlines or scrolling price drops online, you're missing what's actually shifting underneath the surface. Single family homes are behaving one way. Condos are moving in a completely different direction. Builders are playing a separate game entirely. And depending on which side you're on, buyer or seller, this market could quietly reward you or cost you thousands if you read it wrong. So today we're breaking down exactly what's happening and how to interpret it correctly.
Hey everyone, I'm Shanika and this is my husband Saul. This is Viva Tampa, your inside look at what it's like living right here in the Tampa Bay area. We help buyers and sellers across the region every single week, and what we're seeing right now is very different than what most people expect. Some areas are strengthening, others are correcting, and if you don't understand which is which, it's easy to misread the market. So today we're walking you through the real numbers, what's driving these shifts, and what it means for your next move.
So what's actually creating the difference between the home that sells and the home that sits? It starts with one number quietly shaping everything: mortgage rates. The 30-year fixed rate is averaging about 6.09%. That's nearly a full percentage point lower than where we were last year. That drop hasn't created a frenzy, but it has restored stability. For almost 2 years, the market has felt frozen. Homeowners locked into 3% rates didn't want to move. Buyers didn't want to stretch at 7 or 8%. Now that rates have stabilized in the low sixes, activity is returning, but in a measured way.
And that measured pace is important. Buyers are analytical now. They're factoring insurance, property taxes, HOA fees, and total monthly costs before making decisions. So stability hasn't brought chaos, it's brought discipline. And that discipline is what's separating homes that sell from homes that sit.
So if buyers are more selective, what are the numbers actually showing?
Here's where it gets interesting. Single-family homes across Tampa Bay are still appreciating. The median price is $447,500. Up 9.1% year over year. During the first half of February, there were 325 closed transactions across the region, which is about a 5% decline compared to last year. So prices are rising, but the pace of sales has slowed slightly.
That tells us demand hasn't disappeared. It's just more selective. Sellers are receiving about 95.5% of their asking price. Now that's still healthy, but it's not the over asking frenzy we saw a few years ago. Now today, pricing precision matters. Homes priced too high are sitting, and that's the split we opened this video with.
Now, when people hear that sales volume is down, they assume weakness, but that's not what the deeper data shows.
The absorption rate for single family homes is 7.56%. Inventory is up about 7.5% year over year. Average days on the market is around 68 days. That's not crash territory either. That's normalization.
Historically, a balanced market sits around 4 to 5 months of supply. We're hovering around 5.3 months. Buyers have leverage and sellers still have equity, and that's healthy. But that's only true for one segment of the market.
Because when we shift from single family homes to condos and townhomes, the story changes. Median condo prices are down 12% year over year to 290,000. Months of supply sits at about 9.2 months. Absorption rate is just 2.71%. Now that's firmly a buyer's market.
So same region, completely different dynamics, and this is why broad advice doesn't work anymore. Your strategy depends entirely on which segment you're in.
Hey, real quick, if you're thinking about buying or selling in the Tampa Bay area, reach out to us.
Yeah, we can hop on a quick call or Zoom and talk you through your move. No pressure, just real answers.
And if you like our free Tampa Bay relocation guide, you'll find it right here in the description below.
All right, let's get back to the video.
Now, if you're wondering why condo inventory is building so quickly, let's simplify it. First, state laws now require buildings to fully fund major structural repairs. Now that has led to higher HOA fees or special assessments in some communities. Second, insurance costs in many coastal areas have increased. When the building's insurance rises, the cost gets passed down to owners, unfortunately.
And third, investors. Many condos were purchased as rentals, but when HOA fees and insurance increased faster than rents, those properties stopped cash flowing the way they used to. So some investors are choosing to sell. When multiple investors list at the same time, inventory builds. And when inventory builds, buyers gain negotiating power. That's why we're seeing nearly 9 months of supply in this segment. This is not one uniform market. St. Petersburg has surged to 30.9% year over year to a $529,000 median. South Tampa remains strong at around 1.1 million.
Meanwhile, Wesley Chapel is down about 3.3%. Now, parts of Manatee County are seeing builder competition create more balance. Tampa Bay is made up of micro markets, and each one tells a different story. But there's one segment quietly holding everything steady. Nearly 1/3 of transactions across the region are all cash. In premium zip codes, that number can hit 60 to 70%. That changes the dynamic entirely.
Many luxury buyers are relocating from high tax states and bringing substantial equity. That creates a price floor at the top of the market. Luxury is operating on different rules. But there's another force shaping buyer decisions right now. Builders are offering permanent rate buydowns between 4.5 and 5.25%. That's significantly lower than current market averages.
Now, that difference can mean hundreds of dollars per month in savings. When buyers compare resale at 6% to new construction at 4.75 or even 5%, that math becomes compelling. Builders are absorbing demand that might otherwise be shopping resale, and that shifts negotiation leverage. So when you zoom out and look at everything together, single family stabilizing, condos correcting, luxury steady, builders competing, this doesn't look like a crash. It looks like a reset. Resets feel uncomfortable because they're different, but different doesn't mean dangerous. It means strategy matters more than speed.
Exactly. In a frenzy market, almost anything sold. In a frozen market, almost nothing moves. In a reset market, smart decisions win. If mortgage rates dip into the high fives, demand could accelerate quickly. Migration remains strong, and cash buyers continue to provide stability. And here's something I'm curious about. If you were buying right now, would you choose resale or new construction with a rate buy down? Comment below.
Yeah, definitely leave a comment below. We're eager to see what you guys are thinking.
So the housing market in 2026 rewards precision and local expertise. What's happening in one neighborhood can look completely different just minutes away.
If you're thinking about buying, selling, or investing anywhere in the Tampa Bay region, let's build a plan together tailored specifically to you. Call, text, or email us. Our information is below. And don't forget to like, subscribe, and hit the bell icon to stay updated with all our latest videos. And as always, take care and stay blessed. Now that rates have stabilized in the low sixes, now today, pricing precision. Precision? What's wrong with it?